In Chapter 8, we're going to cover home and auto insurance. Our learning objectives for Chapter 8. First, we need to understand exactly what risk is and what risk management involves. As with many situations, the first step is to know where you are before you figure out what needs to be done. Do you have insurance on your home? What does it cover? Is it adequate? If you drive, you're required to have auto insurance, but is it sufficient to protect you? Analyze the factors that influence the amount of coverage and the cost of home insurance. Identify the important types of automobile insurance coverage. What do those numbers mean on your auto policy? And finally, evaluate factors that affect the cost of automobile insurance. Insurance, in its most basic definition, is protection against possible financial loss. Insurance companies are risk-sharing firms. They assume the financial responsibility for your potential loss for a fee. You buy an insurance policy for coverage. As a policyholder, you pay a periodic premium. 3 terms related to risk. Risk is the chance of loss or injury. Risk is by definition uncertain. It's unpredictable. Peril is anything that may cause a loss. Examples: fire, tornado, robbery, accidents. Hazard increases the likelihood of a loss. Examples: drunk driving, bad wiring. Personal risk is the loss of income or life caused by illness, accident, old age. Property risk is the loss or damage to property. Liability risk is the loss due to negligence. It's injury or property damage. Pure risk is insurable. It's accidental, it's unintentional. The financial loss can be predicted and insured against. Speculative risk is uninsurable. Looking more at pure risk. Pure personal risk is loss of income or life. Property risk is the loss or damage to property. Liability risk is loss or damage caused by negligence. Negligence is the failure to take ordinary care. Not repairing broken steps, no fence around your pool. So how to manage risk? Well, first off, just avoid it. Don't go to dangerous neighborhoods at night alone. Reduce it. Put a tall locked fence around your pool. Risk assumption and shifting. This is where insurance comes in. By buying an insurance policy, you've shifted the risk to the insurance company. This chart is in your textbook and gives examples of different personal risk events, the financial impact, and strategies for reducing the financial impact. In each case, the strategies include personal resources, private and public sector resources. Notice that under private sector strategies, insurance is always an option. The first step in every plan is to assess where you are and where you want to be. The same is true with insurance. What coverage do you have? Is it enough to protect you and your family in case of accident, death, illness? Is it enough to protect you in case of perils? Remember the basic set of steps in developing any plan. Where am I? Where do I want to be? How can I get there? What options are there? Select a plan of action, employ it, check your results, and adjust. This is Exhibit 8.2 in your book. By now, we should be used to seeing these charts showing the steps in making some type of financial plan, in this case, an insurance plan. Step 1, set insurance goals. What insurance do you already have? How much risk are you willing to personally accept? How much do you want to shift? How much are you willing and able to pay to shift that risk? Step 2, develop a plan to reach your goals. Does your current insurance coverage meet your needs? What type of insurance is available to meet your goals? What's the cost of each type? Step 3, put your plan in action. Adjust your insurance coverage to match your goals. And Step 4, check your results. Insurance needs change over time. You should reassess your coverage periodically to be certain you have what you need. Looking at property and liability insurance, there have been huge losses in the U.S. in recent years from major weather events. 2017, Hurricanes Harvey, Irma, Jose, and Maria caused over $100 billion in property damage. 2019, Tropical Storm Nestor and Hurricane Dorian, economic losses over $22 million. Property damage included destroyed homes, loss of life, and destruction of businesses. Insurance is about all you can do to give you protection against such huge losses. The 2 main types of risk are related to damage to your property and your liability for damage to others. Property and liability insurance protects you against your legal responsibility for the financial cost of another person's injury or loss. Liability due to negligence results from a failure to take reasonable care. Vicarious liability results from your responsibility for the actions of another person, for example, your child. Homeowners insurance specifically protects you against damage or destruction of your home, including other structures on the property. This includes outbuildings and landscaping, and it is required by your mortgage company. When we looked at renting versus buying a home, we mentioned renter's insurance. A lot of renters never think about this, but it is important and relatively inexpensive. And there are two forms. The broad form covers your personal property. The comprehensive form extends the coverage to all perils. Both usually include liability coverage. If you're renting, don't neglect this. Renter's insurance generally only pays actual cash value of losses, only covers your property at your home, but it does provide liability coverage if someone is injured on your property. The most important point is at the bottom. It provides protection for your personal property. Homeowners insurance covers damage to all buildings on your property as well as trees and shrubs. It also includes additional living expenses for specifically limited amounts and times if you have to move out while repairs are being made. The exhibit at the bottom of the slide gives the 4 basic areas covered in a homeowner's policy. Buildings and other structures, personal property, this is your furniture, your clothing, etc., loss of use expenses, personal liability. The main purpose of homeowners insurance is to protect your main dwelling, but the insurance also covers other structures on your property. Garage, tool shed, gazebo, they're all covered. Additional living expenses comes into play if your home is damaged to the point that you must move out while it's being repaired. There are limits on this coverage, usually 10 to 20% of the coverage amount for 6 to 9 months. Homeowners insurance includes coverage for personal property inside your home, clothes, furniture, etc. This is usually expressed as a percentage of the value of your home. There are limits on certain items, such as artwork and jewelry. This is where a household inventory can be critical should damage occur. Homeowners insurance also includes personal liability coverage for injury to persons on your property. You may need to consider adding specialized coverage for specific risks, such as earthquake or flood. It's recommended that you compile an inventory of your home. Make a list, such as suggested in the graphic on the slide. A video of every room, especially high-ticket items, is also recommended. Include serial numbers and brand names of applicable items. In case of damage or destruction, it's going to be hard to remember every item you had. The list and the video will go a long way to getting the recovery you need. A copy of the list and the video should be stored off-site, perhaps with your attorney or your insurance agent for safekeeping. So-called umbrella policies protect you and your family if you're sued due to injuries or property damage. As the slide states, personal liability in your basic homeowner's policy is usually about $100,000. Umbrella policies are usually in increments of $1 million, provide supplemental coverage, and are relatively inexpensive. Medical payments coverage covers minor accidental injuries to visitors. We'll look at 6 different home insurance policy forms. The basic form, HO1, basic peril coverage, fire, windstorm, smoke, etc. Broad form, HO2, wider coverage, including damage from ice, snow, and falling trees. Special, HO3, is basic plus broad, everything except earthquake and flood and nuclear. Tenants, HO4, personal property only. Comprehensive, HO5, expands HO3 to replacement cost. And condominium, HO6, personal property and building additions. Note that policies usually cover credit card fraud, check forgery, and other miscellaneous costs as well. Now that you're aware of all the varieties of insurance coverage available, the next step is to figure out how much coverage you want, how much you need, how much you're willing to pay for. Do you want to pay the extra cost for replacement cost? Do you need coverage for specific items? Is the basic liability coverage sufficient, or do you need an umbrella policy? Understanding what influences the cost of homeowners insurance will help you make informed choices. Location. It was important in buying your home. It affects your insurance cost as well. If your home's in a high crime area, insurance is going to cost more. If your home is in an area subject to severe weather, higher cost. Type of structure. Generally, a brick home costs less to insure than a wood one, but in earthquake-prone areas, wood homes cost less. Additionally, an older home may cost more as it would be harder to repair or replace. Coverage and policy type. The value of your home, the replacement or actual value. Discounts. Do you have an alarm system, smoke detectors? If you have your auto insurance with the same company. Company differences. Shop around. Compare cost and coverage. Okay, we've got your home covered. Let's move on to auto insurance. All states have compulsory auto insurance laws. But let's face it, around here your odds of being in an accident with a driver with no insurance are pretty high. So you need to have insurance yourself. Coverage falls in two categories: bodily injury and property damage. This coverage is for injuries for which you are responsible. The coverage is expressed as three numbers in the thousands. As shown on the slide, 100, 350. The 100 is 100,000 maximum coverage for injuries to one person. The 300 is 300,000 maximum total for injuries to two or more people, and the 50 is 50,000 for property damage. Again, this is for damages you are responsible for. The medical payment component covers medical care for persons injured in your car, including yourself. This is the component that covers you and your family if injured in or by another vehicle. Uninsured and underinsured coverage is protection if you are hit by someone without insurance or with insufficient insurance to cover the damage. This graphic explains the three numbers in auto coverage again. 100 is the 100,000 limit, one person in an accident, 300 limit for all persons, 50,000 for damage. The property damage component covers damage to the other car or such things as mailboxes or street signs when you are at fault. Collision pays for damage to your car regardless of who is at fault. If you're not at fault, your insurer will attempt to collect from the other driver's insurance. Comprehensive covers all the things that can happen to your car not caused by another car. Hail damage, sleet, cracked windshield, fire, theft. And comprehensive usually has a deductible. With no-fault insurance, each driver collects from his own insurance company for everything related to an accident. This sounds like a great idea to simplify and speed the system, but the coverage and laws vary by state, which can complicate actual application. If you choose, you can elect for added fees for your coverage to include wage loss insurance, emergency road service, rental car reimbursement. Whatever level of insurance you decide is appropriate for you, be sure to consider legal concerns. You need to have enough coverage if you're sued. 100/300 is recommended with $1 million umbrella policy on top. For property component, 50 is about minimum, 100 is better. Clearly, auto insurance costs vary based on a number of factors. The year, make, and model of your car. Newer car, higher cost. More exotic, higher cost. High theft rate in your area, higher cost. Rating territory. Where you live versus accident and theft statistics in your area. Driver classification. Age, younger, higher rate. Sex, young men under 25, higher rate. Marital status, married, lower rates. Credit history. Remember we talked about this in Chapter 5? Driving record and habits, lots of tickets, higher rate. If your driving record puts you in a very high risk pool, you may be assigned to an insurer that accepts those unable to obtain insurance normally, and this is going to be costly. As with all purchases, you should compare companies, the rates, coverage, and reputation. Discounts are available if you have a good driving record, you're a non-smoker, you have a security system on the vehicle, you have more than one car insured, or you're with the same company as your homeowners. Or you can increase your deductible, but this usually doesn't really reduce the premium by a large amount. Types of risk. Homeowners and renters insurance. Factors that affect home insurance. Auto insurance coverage. Factors that affect auto insurance coverage. This ends Chapter 8.